Howdy-ho, neighborinos. Hello, everybody. Unfortunately, we meet again, and you know it's that time. If I make a video, it means we're about to have a correction, unfortunately. We've been tracking the S&P in the market all year. We've been saying how the market is going to correct this year, and every time we make a video, we're going to say it's going to keep going higher, and I'll make another video until it gets to that point where I think it's going to crack. Last video was somewhere in May, and I said I want to see some sort of a violent up move like this, continuous. We kind of got it, but not to what I would like. It almost got to what I would like, but it didn't get exactly to what I like, and it kind of makes this a little bit more murky rather than clean. But a lot of stuff has happened since then. I do think that this is going to be a short-term top in the S&P for various reasons. One being that May 26th was the algo trigger, and technicals have started to slow, and breadth has declined since then, the advanced decline line. And the thing that we talk about all the time is when the VIX trails positively, when the S&P goes higher, that's where you're gonna want to get really nervous, and where you're gonna a real true correction can form. And it also depends how it moves. Here, people said the VIX swell, where the market goes higher and the VIX goes higher. It was right here. They said it on the internet, and it's not true. It's the way it moved here is not the same that it moved here. The way it moved here was very, very violent, very specific, and it exhausted itself here. Here it didn't do that. Here it didn't do this. Very controlled, very condensed. Here it was exhausting itself. Every time it dropped, it had huge rallies into these rounded tops. Huge drops into huge rallies into rounded tops. And every time it did that, the VIX made a higher low. This is a clear, perfect example of a VIX swell, and when it happens, you get a real true correction. Not only that, but you have the VIX MACD here above the zero line. It's classic. It's literally classic. It's literally what happened with COVID. It was a perfect example of COVID when we made almost double top in the market, and the VIX was making a MACD cross above the zero line. It was so obvious this was about to make another leg higher, and COVID happened. It's virtually the same setup. Is that here it gets rejected, goes above the zero line, gets rejected, goes above the zero line. The way it dropped here was extremely violently straight down. No up momentum in the VIX. Straight down. So the market went straight up. Here, the VIX was fighting it. And this is a typical VIX spike and failure. Spikes, comes down and spikes throughout the days, and spikes up again, double taps and fails. Here it didn't do that. Here it spiked and went straight down. No up momentum whatsoever, and coiled in this trend here. This is not typical of a VIX spike and failure. I'd be extremely surprised if it fails here. If it fails here and the market goes higher, I cannot see it going higher more than September-ish. And we'll talk about levels with UVXY in a sec. I really think that it's going to go here. Seasonal weakness August. It's ready to go. I just can't see it. This is classic. Very, very classic VIX swell. Market goes higher and the VIX goes higher as well. We had a MACD cross once, twice, thrice. This is the third time now. We have no ADX on the DMI ADX here, meaning that it's just chopping. It's not a real trend. It's just chopping. So as it's getting dropped, it's popping up reactively. That's not healthy. A healthy move is when it pushes up, consolidates down, pushes up, consolidates down. Here it's crashing down and reactively dead cat bouncing up. That's what it's been doing. And getting a flush out for this MACD to get down to the zero line this month would be extremely healthy for the market. Extremely. It's what you want. It's what you want to see. So specific levels, if it happens right here, right now, within the next 2 weeks where it starts, you're looking at least around 414, so we're about 5%. That's about 6%. We have a gap about 9% lower. I have an alarm 10% lower here. I don't know how it goes because we haven't gone this long in the stock market without a 5% correction in a long time. It's extremely hard to tell how far this would go if it does crack, because there has not been an impulse wave to the downside in a very long time. So it's extremely hard to tell where it's going to go until it starts to go. So it's a day-by-day thing. I'll figure it out as it goes on, which is why you keep up with my stream on Twitch or wait for me to make another video, I guess. But we'll take it day by day and see how this goes. So I'm looking for something like a 5 to 10% correction. And after that, if it gets down to 400, I honestly see the SPY going back up to 460 this year. So SPY is going to absolutely rip after this drop here in August, September area. It's going to absolutely rip. The COVID scare that you're going to get with the Delta, ignore it. You're going to have plays that are going up like APT or AHPI that we've been looking at. Some plays might start popping. Don't worry about it. This COVID era is going to come to an end, and we will rip. You want to think cyclicals, things that are going to do really well in the reopening of the economy once this passes. We also have the 10-year yield dropping pretty low. It's on its course. It's filled the gap here. It's spiked up, got rejected. Could make another lower low down to the 1%. It's kind of in no man's land right now. You don't know where it's going to be dropping. We think silver and gold could be making a new uptrend here. We actually bought silver right at the bottom. That would be pretty funny if this was the bottom. Gold usually seasonally almost always goes straight up the month of August. It tends to have a very bullish trend in August, so keep an eye out for that. The dollar held on its previous resistance right here. That's a big support zone. So you're looking for targets on the VIX to go to at least 28 right here, 29 exactly, and 37.51. This was where the market dropped 3 to 5% or 3% earlier in the year without having a 5% correction. It went up 60%. It's never done that before in history, going up 60% the VIX and then not having a 5% correction. So something happened here where there's an insanely coiled, compressed wave in the market. And I do believe that if we cross that again, especially in the next month or so, that's going to be the bottom point in momentum for the market. It might not be the bottom print on the SPY, because as we know, VIX, if that breaks that high, pulls back and makes a lower high, and then crashes, that lower high, the S&P will be lower. It's just how the VIX moves. Okay, VIX will spike, it'll come down, it'll make a lower high, but the S&P will actually be lower. So you want to take a look at that. It moves like this. This is how VIX spikes move. Spike, comes down, doesn't reach as high and goes lower. But usually this move here, then the S&P just breaks the low. Sometimes it can pierce it a big, sometimes it just breaks it barely and just double bottoms in that respect. So, I mean, we saw a lot of things here. It was really obvious. We saw the VIX futures here, broke this over here, retested it twice. This is going to want to come up to the zero line. The only thing is you don't know if it's going to happen exactly right now. It looks like exactly right now, but there could be another wave right here. See how it's trailing up? This is going up to the zero line. We just don't know if it happens right now or if it does a little extra dance in August. We don't know. But it doesn't matter if you don't know or not. You literally just buy shares of UVXY, and it's for a hedge and also a trade. I said on Discord July 14th right here at 27.15 to buy UVXY as a hedge and a trade. 2 days later, boom, came back down, retested it, and again it's holding it. Also, the meme stocks look like they're bottoming and about to rip. A lot of meme stocks look like they're possibly about to rip, and everyone says that there's an inverse relationship with the market and the meme stocks. Well, we're gonna find out if that holds. So get ready for that. I'm very curious to see if that holds, because this is gonna be the first true volatility event of all year. So it's very important to figure out if it actually, those meme stocks have an inverse relationship with the market. And for UVXY targets, I'm looking for like at least, I mean, you have the weekly middle Bollinger at, I believe, 40, give or take. Let's see. 38. If it gets up to there, it'll probably be around 39. So that's resistance. This is resistance. You might see something like, if let's say it crashes, it'll go through 38 and then pull back. So the market will crash and then get bought back up Thursday, Friday or something. And then probably continue higher. You have a gap at 43-ish, 44-ish, big resistance at 38, 39 this week, and a gap at 43. And then if it breaks that, you're looking at levels at 48, 63. And I think that is very significant here. The 71 on UVXY, this day here on March 25th was a very unique day. It moved in a very, very weird way where it wasn't part of the wave in the market. And it only does that when it's preparing to move in a future wave to that target. So it moved in a way that it shouldn't have gone there. So I believe that somewhere, whether it's this correction coming or in 3 to 6 months, I also think there's going to be another volatility event. It's kind of how the VIX moves in volatility events. Volatility events usually happen in 3 to 6 month periods or 3 to 6 month periods, 3 to 6 week period and 3 to 6 month periods. So it's kind of like this. Spikes, comes down, goes up. This was February. This was end of March, 6 weeks. You get the big spike, comes back down, market goes lower or double bottoms, the VIX is lower and does that, right? Something like that, or something like what would happen in, oh my God, Mayday. Mayday. All right, we're back. Something that happened in 2015, 2016, where we have a spike here. This was the August flash crash. Same volatility event. Spike, comes down, lower low or lower high, comes down, and then this was September and this was January. And this is where it got absolutely destroyed right off the bat in the first week of January. Something like this, I think, might happen with the stock market, except I think this might be bigger. So if we get some sort of volatility event here, we rally into the end of the year, UVXY makes a lower low 20s, upper teens, something like that, and then we get absolutely annihilated early 2022. Like maybe a taper tantrum, something like that. But there's a lot of stocks that look like they want to drop in the first 3 months of 2022. But again, it also depends how this market moves here. So it's all contingent, which is, kind of frustrating, and it's kind of frustrating because you have to wait. You got to wait to try to figure things out, and you have to figure it out on the fly. But here, this is very important. Another one. Again, if you look at UVXY on a 5 to 15 MACD level, you could see every single spike that it has had, it has failed. Spike above the zero line, failed. Above, failed. Above, as soon as it touches it, fails. Touches it, fails. Touches it, fails. Touched, failed, now came back up. And the difference it is now than all the other times is that May 26th was an algo trigger. So see how May 26th, it starts diverging positively, just like the VIX. Look at May 26th on the VIX. The MACD has diverged positively since then. But people don't realize it because UVXY still goes lower, but the momentum in the market peaked there. So the market's slowly reversing, but it looks like it's bullish. Right? And this is the key to timing corrections. Not many people know this. I don't know why. I don't know how. I could save people billions of dollars if they understood this. And so the difference between here and all the other times, popped, failed, but now look at it. What happened today? It gapped down and went straight up. What does that look like it's about to do? That looks like it's about to actually break the plane of the zero line successfully rather than popping and failing. Could it do this? Very, 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 very unlikely because it already did a double rejection to the downside. See how it pops here? It comes down, pops once and gets rejected. See how it comes down, gets rejected twice. Once, pops up twice. It gets rejected twice on the way down rather than spiking up and getting rejected. It's extremely rare for this to just pop up like this and fail with this type of setup like this. So buckle up, literally buy UVXY shares. It's both a hedge and a trade. Lighten up, prepare for some volatility. I don't know how long this lasts. I'll make videos, you know, as necessary, as needed. You can look me up on my stream on Twitch at Grimbarb, and that's that. But this is happening, finally. This took a while, man. This took a while. This was one of the most frustrating tops I've ever been a part of. This was more difficult and more frustrating than the COVID top. COVID was easier to time than this. This was disgusting. These coils, man, these coils, absolutely disgusting. The amount of compression going on in the market. The market wants to go way higher. It just can't. It needs to take a break here or into September-ish. So buy your UVXY shares, lighten up, get ready for a ride to buy the dip, and we will rocket higher after this. We will. I could see something where this breaks this downtrend. This breaks this downtrend, pops up, breaks the high of the year. That would be a trigger. That would fail. It would come back down. It'll retest this into end of year, just like I showed you in 2015. It'll break it. It'll retest it October, November, December, January, and then it will bounce off of this. So this will be like a breakout from the COVID downtrend, so to speak. So then you can get a residual correction move after that. And again, it all depends on how it moves, the violency, the magnitude, and things like that. But as of right now, this is every single sign and symptom of a correction that should be happening very imminently here. So yeah, protect yourself, and not financial advice. Just take my information or my opinion as you would like, and we'll see this play out. All right, go look out there. Stay safe. Make your money. Make your money. Yeah, so the best thing I would love to see is this go down to the zero line. We haven't gotten down to the zero line since the election. The last time it touched the zero line was right before the election into the vaccine. So it exploded higher. So you really, really want to see this explode, plummet into the zero line. It would represent one sine wave, up and then down. It would be extremely healthy if this gets down to the zero line. And you want to see kind of like a double bounce. I don't know if it's going to do this long of one. This took a whole month to play out, but I want to see something like this. Even if it's small, even if it drops, goes up just a little and comes down, something like that is extremely healthy, extremely bullish. And yeah, buy the dip. Think cyclicals. Cyclicals, energy. Yep. Alrighty. And I'll see you guys around. Thank you very much. See ya.